Oh, there we go. All right, perfect. So good morning, everyone, and really lovely to see so many familiar faces, but also a couple of new faces as well. Welcome. For those of you that don't know me, my name is Amy, pronoun she, her, and I am the head of enterprise development at Equally Ours as of last week. Do these things mean anything? But there we go, just had a small promotion. And I run the equality strand of the enterprise development programme, which is now in its third year. So I know a lot of you, and we've been working together for a while now. Equally Ours, we are the membership body for the equality sector. So we're a charity, we're a membership organisation. We have about 80 members working across the different protected characteristics. Thank you very much, Gemma, very much appreciated. Some messages coming through in the chat box there, thank you everyone. So we do a lot of work around policy and campaigning. We also do a lot of work around strategic communications. And more importantly, we also do a lot of work around capacity building to the equality sector. And it is under this strand of our work that the Enterprise Development Programme fits. So supporting organisations, supporting equality organisations to build financial resilience by diversifying their income streams. And we do this at the moment by offering a mixture of kind of seed capital grant or development grants. And also we're beginning to offer some match trading grants alongside a kind of really strong learning menu of different business development topics and coaching support. And as this is quite a new area for the equality sector, we're also trying to grow our kind of ecosystem and network amongst the social investment space. And we've been connected with Good Finance and Big Society Capital through the Diversity Forum. And we're hosting today's session in partnership. So thank you very much to Olivia at Big Society Capital and to Ashita, who are going to offer a kind of safe space and talk through social investment and how it could help your organisation, how it might not be suitable. And I'm going to pass over to Ashita now, who's got far more kind of expertise in this matter and can talk you through today's session.
Thanks so much, Amy. Hi, everyone. It's really, really nice to meet you and really nice to see how many people from all over the UK are joining this morning. By way of introduction, my name's Ishita. You can call me Ish. I am part-time project manager at Good Finance and part-time founder. And I always like to share that because I think it does give me a slightly different perspective when it comes to social investment. So I've been working at Good Finance now for 4 years, but when we went into lockdown in March 2020, I set up a community interest company working specifically with racialized people across the UK who were feeling the disproportionate effects of the pandemic. As you know, pandemic affected different ethnicities disproportionately. So we also do a lot of work, programs work around support and providing services to vulnerable racialized people in the UK navigating the effects of the pandemic. And over the last 2 years, as the founders and someone running a social enterprise, we've gone on our own journey of getting grants, getting revenue, thinking about that ratio between grant and revenue and how we make income and how we stay sustainable. And it has been really interesting to actually be in the shoes of a founder for the past 2 years and think about a lot of these things that you're thinking about in terms of the financial sustainability and the resilience of your organization. But as Amy said today, it is all about just having that safe space to ask all of your questions about social investment. There is no such thing as a stupid question. And social investment is a space where there are loads of buzzwords, loads of acronyms, loads of different kind of financial jargony terms. So genuinely, there's no such thing as a stupid question. I've been here for 4 years. I still find myself Googling things and asking questions. So please do today as well. So in terms of today's agenda, we are in a second going to kick off with a little Mentimeter. And if you haven't used Mentimeter before, it's just a little polling tool. And that's just so we can get an understanding of how you would rate your knowledge today at the start of the session and at the end of the session. And then I will do sort of a bit of an overview of what social investment is and how you can use it. But most importantly and most excitingly, you'll get to hear from 2 peers. So Arik from Diva Apprenticeships will be joining us and Laura from Freedom Foundation. And I love these sessions so much, where you get to hear from people that have actually taken on social investment. And what we ask them to do is share like the warts and all story. So that is the truth, like what has it really genuinely been like, and what were the highs and lows, and what's the impact that it's had, but actually hearing from someone that's been there and done that. And then we'll give some time for Q&A, and for you all to ask your questions. And then I will wrap up with a couple of case studies, and a piece that we call 7 Lessons Learned, which is over the past 5 years of Good Finance running, and we've been asking people that have taken social investment and what they learn, and we found that there's 7 themes, so we'll share that today as well. So before we kick off this morning, Olivia is just about to pop a link in the chat. There you go, you should see it there. And it is a Mentimeter, so let us know in the chat if you're having any issues clicking it, but it will ask you a question just to get a sense of how you currently rate your knowledge of social investment. So if you click on the link and answer, we'll be able to see as a group what our kind of average score is. Okay, so we're at 1.5, 3.5, 3.8. Okay, so like a little bit of like knowledge and understanding, a good level of that.
It won't let me go on that link for some reason. It says something comes up, says
that's strange.
Your connection. I'll try and copy and paste it.
Thanks.
Might just sounds like it's just me. So
well, the other thing that you can do is see at the top of the screen, so you can go to www.menti.com, and if you see the code 8700348, I'll just pop that in the chat so you can copy it. 8708.
So just go to www.menti.com and then put in.
Yeah, so if you just pop that in, that code in, that should take you there as well. We've had about 24 people answer, so we're getting off to a good start this morning. So it's looking like we're kind of hovering at sort of low 4, high 3 kind of space. So we'll see at the end of today's session if that number has gone up at all. Hopefully it has. Do we have another Mentimeter now, Olivia? Do we start with 2? Sorry, you'll have to forgive me. My brain is still slightly in holiday mode. So I'm not the sharpest I've ever been. So our second question, what do you hope to gain from today's session? Do you want to reshare the link, Olivia? Thank you. And understanding of how social investment can benefit our organisation. Yeah, we would definitely love to make sure that that happens. Understanding more of the cons of different financial models. Okay. Better understanding of social investment, understanding the process and interest rates, etc. Great point on interest rates. Peer insight on the realities of social investment. Yeah, absolutely. And really pleased that we've got 2 great speakers today. Insight into real life experience. Better understanding of social investment, has to make it as far as possible. Broadening knowledge. What risks to consider, that's a great one. Yeah, absolutely. Be able to get base understanding that I can share with my managers regarding our enterprise. Okay, wonderful, that's really good to know. Right, so what we'll do is throughout today's session, we'll keep on sort of signposting and sharing things that we think could be helpful to support with some of these things. How do we raise awareness, hearing from peers? Others have said I think there's a lot here around awareness and understanding. So hopefully we'll be able to do that over the course of the session. So I am conscious that the thing that I really want to get to is hear from our peer speakers. So I'll do a very quick kind of overview into social investment and what it is and how it works before we hand over to our speakers. But what I will say to everyone is, as we're speaking today, please do jot down and write down your questions, and we'll try and take as many as we can later. So yeah, kicking off, Olivia, will you take us on to the next slide? Let's start with the role of social investment and just step back a bit and look at kind of the landscape in the UK. We know that social enterprises and charities are dealing with some of the most challenging issues in the country. Everything from criminal justice to education, employment training, housing, income, financial inclusion. And I think in the world that we live in now, in a post-pandemic, post-Brexit world where the cost of living is increasing, that role that social enterprises and charities play is only going to get more and more crucial. Social investment is inherently the use of repayable finance to help your organization grow and to help your organization achieve a social purpose. So if we look at the history of social investment and why it exists and how it came to be, if you think back to sort of the financial crisis in 2008 and in 2011, the impact of that crisis was really profound on the sector. And what happened was that donations from individuals fell, giving from philanthropists and other donors fell. Organizations saw the financial returns on their assets and their investments decrease, and public sector and outsourced contracts that were also cut or cancelled. And all of this essentially resulted in depriving organizations of really vital revenue opportunities in the sector. And in the thick of a recession, organizations became hard hit by funding cuts and decreased grant availability. So what did that actually mean for the sector and for organizations in the sector? So in a landscape where there was decreasing resources but increasing demand, social impact organizations really needed to consider their resilience and sustainability, their income generation, their revenue models, and the funding and the finance required to support their organization. Now, in an ideal world, what would be amazing would be enough grant to go around, but there's very rarely going to be enough grant to go around. You know, grant giving is a relatively finite pot of giving. And it's really important to remember that as an organization, oh, here you go, sorry, we've got a note. Alyssa said, can we make the slides full screen? We can see the next slide in the presenter display. Olivia, will you just pop that into full screen mode?
Please share it 24 seconds.
Thanks for that note, Alyssa. So yeah.
Is that better now?
Yeah. So yeah, give me 1 second. Yeah, so how does social investment inherently work? So the thing that's really important to remember about social investment is that it is repayable finance. And how it works and when it can be used is when organizations who generate a surplus through trading activities, contracts, grants and donations, or a combination of all of them, can use social investment to grow the impact of their organization. So their profit or their surplus would then be used over time to pay back social investment. But the really, really important thing to remember is that as an organization, you have a financial toolkit. So we are not at all saying that social investment is the right tool for the job. What we want you to leave with today is an understanding that social investment is one of the tools for the job. So it kind of sits alongside trading, grants, contracts, donations, and it is all about sort of recognizing when it might be the right tool for the job. So we'll play a really quick video on what social investment is.
Across the UK, charities and social enterprises like yours are tackling some of society's biggest problems. Maybe you've set up a coffee business to give people the skills to get back into work, or are running a nursery and using the profits to support local parents. Whatever your mission, you'll need money to help with cash flow, to grow your organisation, or to buy an asset like a new building. You might even need finance to kick-start your new venture. And that money could come from traditional grants or donations, or as a loan from your local bank. One option is to get that money from a social investor. That social investor could be an organisation or an individual, and you can borrow their money or offer them shares in your organisation. But what makes a social investor different? Well, they don't just want to see a return on their investment. They want to see their money being used for good. helping you to keep delivering your social mission. Sound good? To see if it's right for you, check out goodfinance.org.uk.
Thanks, Olivia. So yeah, hopefully that's given you a bit of an overview into what social investment is. As we said earlier, it is part of your toolkit, and you may use a combination of these tools depending on your circumstances. So you've got trading, donations and fundraising, social investment, banks, contracts and payment by results. And what we always say to organizations is, even if you consider social investment and realize that it's not the right tool for the job, that's still a good place to be, because you then become aware of it as a tool and as something that you can use. Where we see social investment working really well is when organizations have a purpose or an idea in mind for what they might use it for. And quite often we see organizations use it to help buy an asset, to get working capital to potentially help deliver a contract, to kickstart their organization, to grow their work, or to develop new innovations. So what's really interesting about social investment, I think, is on the Good Finance website, we have something called the investor directory, and there's nearly 100 investors listed on there. And we did a bit of a sort of check on the investors and their legal structures and their models. And what we actually found was that 85% of social investors are themselves registered charities or social enterprises. And it's really important for a social investor to be investing into things that make impact, and also generate return and generate revenue. And that's kind of the balance that social investors will always be looking for and interested in, is what's your impact and does it align with what the investor wants to invest in, and also how are you going to pay it back. And if you've got that kind of balance, and if you have a clear understanding of what you might take social investment on for, then it could be the right tool in your toolbox. And then we just hop on over to the next slide. So a couple of things that you need to think about if you do want to take on social investment. 1, your purpose. 2, your repayment. And 3, your impact. What do you need it for? Is that to buy an asset, to maintain cash flow, to kickstart an area of your business, to grow and innovate? Is there an idea that you need some funding to try? 2, is there an income stream with surplus? So how will you repay it? And this is a really important thing to remember, because unlike grant money, social investment is not benevolent money, so it does have to be paid back. Whether that's through government contracts, rental income, membership fees, donations, trading, however you're going to kind of make an income stream with a surplus, how will you pay that back? And number 3, what social impact will you create? And this is a really important one, and something that all social investors look for. Understanding your activities and your outcomes, who it benefits, thinking about how you're measuring and reporting, and ensuring the sustainability of your impact. As social investors themselves, as social enterprises or charities, they're always going to want to really understand the impact of what they're investing into. So, as I mentioned before, there are lots and lots of jargononyms, acronyms, buzzwords in this space. But inherently, there are 2 main kinds of social investment products available. They're all called a combination of different things, but inherently, social investment products are either debt or equity. So debt is when you borrow when you borrow money and you pay it back over time, usually with interest. And things like interest rates will completely vary from investor to investor, depending on a range of factors on the investor themselves and what they're investing in. But debt is inherently, paying it back with interest over time. Not dissimilar to a mortgage or taking on car finance. It's the same principle. Equity, on the other hand, is when an organization sells shares to an investor so that the investor owns a percentage of the organization. There are also things called blended finance, and that's something that might be like a combination of debt and grant. So, for example, it might be a situation where you get £50,000 grant money and £50,000 that you have to pay back, and that's what we would call blended finance. or quasi-equity, which is something that we called equity-like. So there's a really great tool on the Good Finance website, which I'll show you later, and we call it the diagnostic tool. It's like a 2-3 minute tool that will ask you a series of questions and work out if social investment could be right for your organization, but most importantly, what type of social investment could be right for your organization. So there's probably about 30 to 40 different types of social investment. But I'd really recommend the diagnostic tool in the website to figure out which one could be right for you. And then in terms of how you get social investment, there are two kind of ways of getting social investment. One is through an organization. So this can be a specialist social investment firm, a social bank, or a trust or a foundation. Two is through individuals. So there are also things like crowdfunding, community shares, tax reliefs, and angel investors that can contribute towards the social investment space. So just to answer some questions that are in the chat, yes, the recording is definitely going to be made available afterwards. And in terms of the remaining 25% of social investors, it could be a combination of private businesses, mainstream banks, or individual investors. So in order to sort of understand who the funders are, it's really helpful to think of this scale, where on one side you have social return and on the other side you have financial return. And different funders will prioritize different things. So what you might find is that traditional mainstream funding, like individual investors and even some of the social banks, will be more towards the traditional investment side of the spectrum. And one of the things that they'll be considering is financial return. On the other side, you have where social return is the most important thing. And there is where you see your philanthropic givers, so your trusts, your foundations, tend to be on that side of the spectrum, where what they're prioritizing is social return. Social investment is something that sits sort of in the middle. Yeah, of course, Amy, sorry. So Amy said, would it be possible to give examples of some of these types of organizations? Yeah, I'll definitely try and do that. So social investment sits sort of somewhere in the middle. So if I think of a couple of examples, so if you look at organizations like Esme Fairbairn Foundation, so really respected, really established grant giver, and traditionally does a lot of philanthropic giving and giving out grant sums. But Esme Fairbairn Foundation also have a small team that do social investments. So they are sort of more on the philanthropic side of giving, but they do have like a little bit of social investment that they do as well. In the middle, sort of you have social investment and social banks, and those social banks can include organizations like Triodos or Charity Bank, Unity Bank, so banks that are sort of specifically set up with that social purpose to lend to charities and social enterprises. And then you have sort of specialist social investment fund managers. So there are lots and lots of specialist social investment fund managers. I won't give examples, but what I will say is if you go onto the Good Finance Investor Directory, you'll see kind of all of these organizations listed. So if you kind of want to explore who the investors are, that's a really good way of doing it. So coming on to my last slide before I hand over to the speakers, there are a couple of places that I think I always signpost to, and I think they're definitely worth being aware of. First and foremost, the Good Finance website. I'm not just plugging it because I work for Good Finance, but it is a really, really great starting point if you're trying to understand social investment for yourself. So something that's really interesting on there is the diagnostic tool. It will help you work out whether it could be right for your organization, but also what type could be right for your organization. Something else that we've got on there is the investor directory. So you can actually go on, you can see who the investors are, what they're investing in, where in the UK they're based, and if they have the kind of investment that could be right for your organization. So definitely recommend spending some time on Good Finance website. The Reach Fund also asks for, also provides a grant for charities and social enterprises to help them raise investment, and it's sort of supported by the Access Foundation for Social Investment. And these these, oh, Amy's just put, I use the Good Finance Jargon Buster, the resources there are great. Thank you, Amy. We love the Jargon Buster because there is so much jargon in this space. And I think Rosie, who looks after Jargon Buster, might actually be on this call. So there you go, Rosie. We've got a fan of the Jargon Buster. So yeah, the Reach Fund provides sort of grants for charities and social enterprises to help them raise investment. And one of the challenges quite often with raising social investment is that it takes time and it takes resource, and you have to be able to, do, the due diligence, the application process, all of that kind of stuff. And your organization might need support in order to get ready for social investment. So you might think, yeah, this is definitely for us. We know how we'd pay it back, but we just don't have the capacity to do it, or we need help from expert consultants. And that's what the Reach Fund is really great for. It can provide you that kind of bridging support to help you get ready. And the Social Investment Business Recovery Loan, which provides funds to charities and social enterprises so that they can recover and adapt and grow. Something that I would really recommend is just spending a bit of time on the investor directory to see all of the different options that are out there for different funds and different investors. So we will come back to some of this later. We've got a great question in there. Does the directory distinguish funders that will fund CIC organisations as well as trading charities? No, the directory doesn't, but what does is the diagnostic tool. So what I would really recommend is going on the website. The diagnostic tool will ask you about your legal structures and various other questions about your organisation. And based on those questions, it will tell you what types of product types are right for you. And then what you can do is go to the investor directory and search based on those product types. So it might tell you, as a CIC, we think that these 3 types of social investment are the most relevant for you. What you can then go do is go to the investor directory and search who's providing those types. So that's probably the most logical way to do it on the website. Lots of great questions here, but also really, really keen to hand over to our peer speakers. And I've actually heard Arit speak before, so I know that she is brilliant, and I'm really, really excited for all of you to hear from Arit this morning. So without further ado, I think we've got Arit in the space. But if you could come join us, Arit, and I'll hand over to you.
Can you hear me?
Yeah, I can hear you fine.
Hey, everybody. Hold on, it's just a fan beside me and it's really loud.
Sorry, thank you. I was just going to ask Olivia to spotlight you, but she's done that now, so thank you. Carry on, Arit.
Oh, what does that mean?
It just means that we can all see you in the chat now.
Oh, I apologize for that.
That wasn't you at all.
Hi everyone, so my name is Arit, and I run a company called Diva, and we are a recruitment and training organization specialize in apprenticeships in the entertainment industry. So that's film, TV and music, but I merged the company with another organization called All Spring Media at the end of the pandemic, so we kind of fall under that umbrella now. But in terms of the purpose of the convo, which I can talk about if people want to ask me questions about how that worked, in terms of the financing, I was listening to, is it Ashita? Did I mispronounce your name? Apologies if I did. Go through her presentation, and I thought there was some things that came up in that I thought would be helpful to just expand on and give a perspective from somebody who's raised finance. So legal structure. So Diva is a private limited company. So by that I mean we're profit making. And that's because I don't believe you need to take an oath of poverty in order to make an impact. But that does limit your access to social investment, but I did raise social investment. And in order to do that, if you're thinking that you want to be a profit-making company, and there's nothing wrong with that, then you do need to consider maybe putting an asset lock. You might be asked to put an asset lock in your articles of association. And that's quite a straightforward thing to do. And usually the person who's asking you to do that will be able to link you to somebody who can support you to do that. But there's information and templates that you can use. But essentially what that asset lock means is that you're agreeing to donate part of your profits or reinvest part of your profits for making that social impact. So and I think for ours, it's about 30%, 40% was locked purely for making profit. So that's something that I wanted to touch on. So you don't need to be a charitable organization as such. And secondly, when it comes to your raising your finance, I think, again, what came up in the presentation was the need to for time and resource. You will spend a lot of time having to prepare, and that preparation does include your business plan. Now, I actually got some finance, about £15,000 from the Reach Fund, which was mentioned on your presentation. And with that, that allows you to go and get help to pull together your business plan. And your business plan doesn't have to be this lengthy tome that nobody will ever read. You can make it look, you know, more like you, more like your business. But I think it's very important that you go through that process, because it's about you. It teaches you more about your market and your opportunity, and you're forced to know your numbers. So knowing the cost of every sale, from the cost of your time to the cost, I don't know what, so we deliver apprenticeships, so we get a certain amount of funding, but we also have a lot of costs involved in that. So being able to cost that out, not just for now, but if you're trying to raise finance, it's about projected costs, and it teaches you about, you might not be able to work a cash flow like an accountant can, but you at least know what a cash flow is. You at least know when you're in those meetings pitching for finance, you see it on The Apprentice all the time. So talk about the money and people are like, the money. It's like so focused on the product and the service. It's like, yeah, we're going to make money. We're going to make money. How are you going to make money? And so it just teaches you, because then when you come to negotiate in your prices with, say, a client, then you're able to know what your margins are. So it's important that you go through that exercise, but don't overlook the amount of time that it's going to take you to dedicate to raising finance. The second thing that I wanted to talk about is always start with the end in mind when you're thinking about the finance that you're going to raise. So I raised about £100,000, and that was was described in the presentation as blended finance. So it was part debt and part grant. And I raised that through Unlimited, which offer funding into social enterprises. And they are a founder first financier. So in part of my journey for raising finance, when it was to grow the organization, I looked at different forms. So I looked at private equity as well, and spoke to people who had investors, and that can be hit and miss, because you need to find investors who not only have the money, but also understand your business and are people that you are then answerable to. So you need to be really clear in that interview process what you are committing to, and have a good lawyer so that you're reading contracts properly, because those contracts are written for when things go wrong. And so often you read them like, yeah, I'm getting my money, but you have to understand that part. You have to focus on, if things go wrong, where do you sit in that equity flow? So there's equity finance. I also looked at, there's different forms of debt. So you've got unsecured debt and secured debt. So say you're overdraft at the bank, that's generally secured debt. So if the business fails, they come for you personally. Unsecured debt means if the business fails, the money just disappears. So the debt finance that I opted for was unsecured through Unlimited. So it kind of dies if the business dies, in a sense. So that's important for you to think about as well, because say, for example, if you have a property and you get secured debt, the bank will come for your house, can put a lien on your house. So you have to be clear about what you're prepared to sacrifice for the impact that you're making when it comes to debt. How long have I got again? Have I used my 10 minutes? I'm not timing myself.
No, carry on, Art. We were running a little bit behind, so if you want to talk on for a couple of minutes, and then we'll go to Laura and we'll come back then for Q&A.
What else was I talking about in terms of net, and what I also did in my journey, because I share the comments around jargon. Oh my gosh, and it can make you feel so stupid. Like you go into like I started to go to networking events, and I went to networking events with angel investors so that I could understand how they spoke. So, and by that, it means that everyone in the room has money to invest. I mean, I didn't have money to invest, but well, I had some money, but we're like, have you got money to invest? Yeah, I've got money to invest. It could have been like, I'm going to invest in nothing. It was just going in there so I could understand the language that they spoke and what they were looking for. And so, you know how we can sit here and go, oh my gosh, there's so much jargon. There's also things that they look at investors or at potential investments where the founder is not passionate, the founder doesn't know their sector, the founder doesn't know their numbers. So it's kind of like a learning exercise. And it also it's good networking for you too. So as well as going to events that are about, like the British Library have a business IP center, it's called. You can log online and they do like loads of workshops around helping you build your business. And they did one, and they probably still do it, on finance, on raising finance. So I encourage you all to go to those, because it just really teaches you, it helps you decide, because you've got to start with the end in mind, like what's your exit strategy. And so by that, unless you've got, you know, kids that are going to take over from when in the business is going to continue, then it's going to end at some point. So you need to think about what's that end going to be, and then go backwards from that. What kind of finance do you want to support that? And thinking about yourself too, what kind of support do you need from investors who are coming in? So for me, I had enough support in terms of developing. I had an exec board who could help me develop the business, but I wanted, just because of how I'm wired, I like to work more in a collaborative way. So Unlimited were great partners for me in that sense, because they're very collaborative and they're founder first. They're very much about making sure that you are well, that you are being supported, because if you're not being supported, the business will fail. Do you get what I mean? So you have to think about what kind of people you want to partner with in the development of your organization. What else did I have to talk about? I think that's it, but I might have, and it's stressful. You're going to have to repeat the same thing over and over again to people who don't necessarily know your sector, and stuff that might sound like to you is not to people who are outside your industry, which is why going through that process of nailing your business plan is really important. So that's all I had to say.
Thanks so much, Harriet. I mean, it's just actually so valuable hearing you speak to it. And I'm lucky enough that I've heard you speak before, but it's so valuable. And I'm sure there's going to be lots of questions for you as well. But without further ado, let me bring in Laura from Freedom Foundation. And Laura's going to spend a couple of minutes sharing her perspectives as well, and then we can take some questions all together. Do we have Laura? I think
yes, I'm here. Sorry, I'm struggling with my connection, so I've just come on my phone because I kept going in and out. So I hope everyone can hear me all right. Good morning, everyone. I'm Laura Grant, and my business is Freedom Foundation CIC. We are a social enterprise limited by guarantee. We're based in Nottingham and we're established in 2018, and our work is working with children and young people to support their mental and physical well-being. So we run music and dance programs in schools and community settings, and work with quite a number of partners where we deliver our programs within their settings. So it's myself and my friend and business partner, Stacey, who set the business up in 2018. I've got a background in the charity sector, and at the time was working for a domestic abuse charity, working with children and young people around prevention of domestic abuse. And Stacey is a performer and singer, and has her own dance school. So we came together really from our day-to-day experiences of what we were seeing with the children and young people we were working with around how mental health was really increasing, and how social media particularly was impacting on young people's mental health. So we very naively decided that with her dance and music background and my charity background, we could create something that could support children and use music and dance as a platform to help their mental health. And we started just the two of us, you know, like many of us do at our kitchen table, surrounding ourselves with people, trying to get advice, and looking at what the best model would be. I was lucky enough to be successful in joining the School for Social Entrepreneurs programme, which some of you might know. And back in 2018, I joined their startup programme. So depending on where you are in your journey, I'd really recommend having a look at them. I'm actually on their trade up programme currently, and they've been a massive part of Freedom Foundation and how we've grown and learnt. So we kind of went along for a couple of years. Stacey was running her dance school. I was still working for the domestic abuse charity, trying to make it work, getting a few grants, getting some sales. Our ambition has always been around having because I've got a charity background and, you know, understand the challenges around grant funding. We were always really keen that we wanted to create an organisation that was sustainable and had a large trading income. So we started looking at selling to schools. And the beginning of 2020, we were doing really well. During that academic year, there was lots happening. Obviously, I don't need to tell you what happened at that point. But actually, for us, we did really pivot and did a lot of online stuff and created resources. And that was a really good time for us. And we saw a lot of growth. Then also around that time, we started working with a coach. So I managed to get some funding through our local university to work with a coach. And that was a real turning point for us. Part of the reason for that is as I finished SSE, we had some people from Good Finance come to talk to us and introduce a little bit like this, introduce us to what social investment was and why you might take it on. You know, as many of you will know, in terms of that beginning part, it's hard to get money for your core costs, and for us, our growth needed to come from an investment in business development, which is my role. But I was finding that I wasn't able to have the time to do that because I was so busy running the programs and running the delivery. So through working with this coach, we identified that essentially if we wanted to grow and have the ambition of being an organisation that delivered in schools and communities across the East Midlands, which is what we want to do, that we were only ever going to sort of plateau. We'd got to capacity with the work that we were doing. So we identified that the only way we were going to do that is to bring in some more capacity, which needed some investment. So that's sort of where we started looking at it, because, you know, again, as you'll know, it's hard to get that kind of funding in terms of grants. So I approached somebody who had presented to us at SSE from Key Fund, and we just started really working through their documents, their business plans. You know, we'd done our own business plan. We looked at that. We looked at our financial forecasts. And so at the time, our turnover was about 150k. And we wanted to have two people. So we wanted to have someone to kind of do the work that Stacey was doing, someone to do the work that I was doing. So we applied for just over 70,000. And the Key Fund team worked with us to come back and sort of say, well, that's quite a lot at the moment in comparison to your turnover. As you know, we've talked about, you've really got to think about what that investment is going to do for you. So for us, it was for somebody to take on the day-to-day administration of the stuff so that I could grow and go and do business development. So the business plan had to demonstrate how we were going to increase our trading income in order to continue to grow, in order to continue to pay for those members of staff moving forward beyond that initial investment. So they were really, really good. And I learned a lot through working with them. And we took on that investment. We took on one person. Through working with that business plan and working through a financial forecast, we also identified that if we were going to do what we wanted to do, actually we could afford to take another person on. that was a massive risk for us because we were kind of backing ourselves with the projections that we'd done, but we did do that, and we took 2 people on who have just completed their first year. So for us, it's been a really, really positive experience. I don't think we could have done it any other way. We'd have, you know, just carried on being hand to mouth with, you know, getting pieces of work, maybe employing somebody to do that, you know, a couple of days a week here and there to work on different projects. But having 2 people to be able to enable Stacey and I to kind of do that thing that, you know, with social entrepreneurs talk a lot about, in being on the business rather than in the business. That's what it's enabled us to do. So they've just completed a year. We've kind of 3-folded in terms of our income, and we're about 50% trading, 50% grants. We've increased some longer term projects. I've done a lot of work with partners. So it's been a really, really positive experience. I think, as we've talked about, you know, it's hard to make the decision to do it, takes commitment, and it doesn't happen overnight. I think that was the thing for us, that we were like, oh yeah, we've decided to do it now, we'll fill out a business plan, and, you know, we put in an application and we'll find out in 8 weeks. It's not like that. And I think, obviously I can only talk for Key Fund, but it certainly stands, and I've heard great things about Unlimited. I think if you're working with you know, a social investor, they want to make sure that you get the investment, and they want to work with you to make sure that it works. And certainly in terms of my peers, I've heard that. And you know, if you're, I know we'll have different makeups of organisations. For me, it was really important to go through the social investment route, rather than taking on any, because you know, we talked about at the beginning the way the fund came about, and I like the idea that it pays back to future social entrepreneurs to help their businesses. So I think, you know, allow yourself time, allow yourself commitment, you know, be willing to be flexible, and use the opportunity to really be clear about where your business is going. And actually, like for us, it might surprise you, and it might enable you to do some other things as well.
Thank you, Laura. That was so interesting, and really interesting to hear kind of the similarities in yours and Arit's experience as well, but also where they differed, I guess. So we'll open up the space to questions. If you have a question, pop it in the chat, or feel free to put your virtual hand up. So I'll just wait a couple of seconds and see what questions we've got. Otherwise, I've got plenty for you both. Oh, sorry, I'm getting a furniture delivery. Olivia, will you just manage this for me for 1 minute? I'll be right back.
Yeah, of course. Laura, there's a question that's come through in the chat for you. What kind of coach did you work with?
So it was a guy that runs his own coaching company. I got some funding through our local university, run a program called Help to Grow, that's for SMEs, not just for social enterprises. And we were given, I think it was sort of 12 hours with him to start off with. And he worked with Stacey and I both individually and separately, which was really useful. And then just in that short amount of time, we got to this point where we were like, yeah, what do we need to do to look at growing? So then we were able to get some more. We got about another 30 hours with him, and he's actually our non-exec now, and he's continuing to work with us.
Oh, brilliant. And a question from Amy in the chat, and I think this would be great for both of you to answer. How much were your boards and directors on board with social investment? Or was it a difficult process to try and convince them to kind of get on board? Arit, I'll come to you first of all.
They were very much on board and very instrumental in helping us get ready. So they were really helpful, and so they understood the sector, so helped to kind of inform because I already had an understanding of how the industry worked and how the money flowed and what the opportunity was. And so in all of the there was a demand in kind of our industry, in the film and TV and music industries, to support new talent into the industry. So they were really helpful in terms of helping me before I got the funding from Unlimited, and I was on that journey of trying to explore which is going to work for me. They were really helpful in making sure that I had the key information in place, especially around the cash flow, and could talk fluently about how that worked. So you don't have to be an accountant, but you do have to understand how the money comes in and goes out of your business. They're really helpful on that.
Fantastic. And same to you, Laura. Was there any kind of apprehension around social investment from your board?
Yeah, certainly from our finance board member. But again, that helped, and I think, you know, that's the beauty of having boards, you know, that can challenge us. So that helped feed into certainly the financial part of the business plan. And once we'd worked through that, because obviously it was convincing him to make sure the rest of the board were happy as well. But again, it got, one of the things, I think it helped shape our board, and that was something that they got involved with. So for example, we've got a teacher. So we do a lot of work in schools. We've got a teacher on our board, and it was great to be able to bring her in and work with her and sort of talk to her about what was realistic and how we were going to sell to schools. So it also helped. I think we were quite early on with our board at that point. So it really helped shape their roles, and it's meant that they're more invested in how we're doing, because they feel that they've had a part to play in that.
And I think, just to add to that, I think it's important, because I'm a sole founder. So when you have a board and you're choosing your non-exec board, it's kind of adding value to what you do, and it gives you support, and it kind of gives you what's the word? I think it increases your ability to raise finance, I think, because you can draw on their expertise. So their expertise was referenced in my business plan. So it's not just you. You've managed to attract industry kind of experts, people who are adding value to your business, which is really important if you're a sole founder.
Absolutely. We've got Grace and Jan from Collaborative Women who've raised their hand. I don't know if you want to come off mute to ask your question.
Hi, I don't know if Jan's here as well. This is Grace McCorkle, one of the co-founders of Collaborative Women, and I think this is absolutely brilliant session, and in particular hearing from Arit and Laura, some very good insights, so thank you very much. I think some of the things that you've shared resonates with where we are now as an organisation, on the precipice of wanting to grow, but also wanting seek the right help from the right professionals at the right time, but also finding it difficult. So one of the questions that I'd asked was around, say, because I think this is quite crucial. You both have mentioned looking at your business plan, but your business plan being reflective of the organisation. To Arit and to Laura, the coach that you worked with, or the individual, is that, or was that a fundraiser specific to raising your funds, or was that a individual who specifically helped coach you through the next growth spurt of your financial aspirations? Second, in terms of these networks, are there any particular networks that you would suggest would be useful to understand and have a better insight in terms of the financial or stroke funding market for organizations that are mid-flow and ready to take the next step? Those are the key things, I think, for myself, and I don't know if Jan has any.
Yeah, I've got my pen poised.
Could I just go first then, because I do need to shoot off in a minute, I'm afraid, if that's all right, if I could answer this and then go. So in terms of the coach that we worked with, it was a business coach. Obviously, a big part of that was looking at the financials, but we were lucky enough to have a financial board member, so worked with him in detail around the finances. So it was more a business approach, really, and particularly looking at those key things around where is the money going to come from, how is this sustainable, how are you going to pay the money back, and really drilling that down and being quite challenging around that, which, you know, obviously because I've got a business partner, we did that to each other, and he did loads of exercises around sort of sending us off and going, right, what do you think is realistic, what do you think, and is, you know, coming together. And that's really how we built a lot of the numbers. I think in terms of networks, there's so much, and, you know, depending on where you are geographically, the makeup of your organization. Obviously I've mentioned SSE, and even though I'm involved in their programs, you know, you don't have to have been on one of their programs to access a lot of their information. They do great webinars, they do great information, do great training. So there's something that there's somebody that I would definitely recommend having a look at. And then we got our coach, you know, like I say, we're based in Nottingham. We're a creative business, so we're part of something called a creative quarter, which has quite a lot of funding for support and networking for all different kinds of businesses. So I know a lot of cities and counties potentially might have those types of networks as well. And, you know, particularly as a social enterprise, it's really, you know, when you're looking at investment, you know, we're running a business, it's good. Like the Help to Grow scheme I went on, we were the only social enterprise on there. So the approaches of things can be very different. And you can learn a lot as regards to the business and the setup, because they're very similar.
Thank you, Laura.
Okay.
Appreciate that.
Thank you.
I'm going to say good morning and bye to everybody then, if that's okay, Olivia.
Yeah, of course. Thank you very much, Laura.
Okay. Good luck, everybody. Nice to meet you.
I think from the coaching side, I mean, I've had a business coach before, but I didn't use him I didn't work with him during the process at which I was raising finance. The person through the organization, Reach Fund, where I got finance from, to help me prepare what the documentation that I needed to present and raise finance. So that's just to refine our business plan, cash flow, etc., etc. That person was not in my industry, and there were pros and cons to that. The pros meant that I had to really know my industry and to be able to clarify and quantify how the process worked, how we were going to generate money, who our competitors were. I had to be able to be very clear about that. The cons were, you have to keep saying that. So I think if you're going to get a coach, it's helpful if they understand your sector, or you have somebody on a more strategic level who you can bring in and work with you to share that knowledge with them, because it can be a little bit frustrating when you know your industry and what you're trying to achieve and they don't quite get it. And when you're writing your plan and they're supporting you, it's like there's a bit of pull push, because it's like having someone that actually gets it, even if they just had a recruitment background, to be fair, would have been really helpful. But I think it's still kind of honed my ability to be very quick and clear about how our industry worked and what I was trying to achieve. So that's why I say there are pros and cons to it. I can't remember what the other question was, sorry.
I think this leads on really well, I think, to a question that Fatima's asked about how inclusive and wide does the target audience need to be able to get funding. So she's looking specifically at targeting a Muslim community. And she's just kind of wondering, do you think kind of that the impact that you're looking to make, does it need to be kind of a wide ranging impact, or do you think kind of making quite a, I guess, kind of targeting a particular group or targeting a particular outcome is important?
I think you have to be focused on whatever your business is and understand who your audience is. But remember, it's not money just for the sake of money. You need to be able to make money. And I think sometimes when you're in the social space, like I said earlier, there's an expectation that you have to take some oath of poverty in order to demonstrate the fact that you're going to make an impact, and you don't have to do that, but you do have to apply business principles to your CIC irrespective of what your structure is. So it doesn't really matter who your audience is. It's about what's your service, where's your income coming from, where's the expenditure, and how much are you retaining, how much of that income and expenditure is profit. Now, profit isn't a dirty word. Profit means you're reinvesting and you're becoming sustainable, because ultimately, you know, if the last 2 years, the pandemic has taught us nothing, it's about, you have to have reserves, right? So how are you going to be profitable? Say the grant funding left you, would your business collapse? Then that's not about the funding. For me, it's about you being kind of really commercial, even within your impact, so that you can continue to make that impact because you've got other revenue generating aspects to your business. I know a woman who is very passionate about first aid and mental health and providing that to people, reaching people at their point of need, right? That's what her business is about. She also has a commercial side to her business that enables her to charge clients fees for first aid training, and a percentage of that fee goes into her social her social impact work. And that's part of her USP to her clients, because yes, you're paying, yes, they're slightly more expensive, but I think it's 10 or 15% goes into that business. So she runs little on grants. So you have to think about, if it doesn't matter who you're targeting, it's about how my service, what's my margins, and how much am I going to retain so that I can reinvest and make some money. But you can't come into this like, oh, with impact, I can't survive if I don't get a grant. That mentality doesn't make sense to me, because how can you make impact if you don't have a commerciality to how you work? And it's not a dirty word. It doesn't mean that you're like big bosses, fat cats. No, it's just basic business, right? Money comes in, goes out. If there's more money going out, you're going to sink. So.
I think you're absolutely right, and it's looking kind of at the long-term sustainability, because while grant funding is absolutely great to kind of get your business off the ground and get it going, it's how are you going to make that business model more sustainable?
It's sustainability at the end. It's not project. And I think sometimes when in social investment you think project, it's for this project, but that project is just one part of something bigger, right? Like what's your service? What is that? What is that? And then lots of different things can latch onto that why your service. But ultimately, some might be lost leaders. You're not going to make any money, but there's got to be a commercial element to what you're doing, or else just go get a job because it's less stressful.
There's lots more questions coming in, Art.
I have a little bit of time, but then I've got to prep for another meeting.
We'll do one or two more, but then I'll let you shoot off. We've got one from Claire who's just asked about your asset lock. Did you manage to get any grants or finance aimed at CICs and charities?
Claire, real talk, I didn't even know about an asset lock until I found funding. So I did it reverse way. So I just, to me, because of what we do, yes, we're a limited company, but my argument has always been like, it doesn't mean that when we're accepting that finance, a contract is a contract, right? So it's like, how is that worded so that you as an investor get what you need from me, and I'm able to deliver on that impact? That's the way that I go into finance and space. So because Unlimited, I didn't really go near much social investment, because I'm a limited company, and I was of the mind that, oh, you can only get that if you're a charitable organization or you're limited by guarantee, which means you don't have shares. And I was like, I don't want to be old and like have no money to be able to feed myself and look after myself. Old Lady Arrett wants to live a good life. So I was like, that's kind of not going to work for me, because you have to think of yourself as a founder as well, and what your own financial ambitions are and what kind of life you want to have when you're older. So when I came over to Unlimited, and they came to me, actually, I was speaking at an event, and the founder and Mark, who runs Unlimited, he gave me his card, and he was like, oh, you're probably too big for us, but we would love to talk to you about financing. And I thought he was talking about financing for the people, because we have entrepreneurs and stuff in our who we support. But he's like, oh no, financing for your business. And then I was like, oh, but I'm not a charity. He's like, you don't need to be. And then I was like, okay, cool. So that's how that conversation started. So I think there needs to be a bit of work from funders to clarify whether this asset lock, and maybe more work to be done to actually make people aware of that asset lock. And now that you are aware of it, I would take that to any financier. If you are if you're a limited company and you're going for grant funding, and ask the question, if I put an asset lock in my articles, will I still be able to access the grant, because this is the impact that I'm making. So long as you're making a social impact, as far as I'm concerned, it shouldn't really matter what your business structure is, because there's things to support that.
Great response. Thank you very much, Art. I'm aware that you have to head off. I see we've got one question for a collaborative woman, so maybe if I pick up separately, or I don't know if you've a minute to answer, or if you need to head off, because I can follow up with questions and stuff after.
I have. Is that Amy? What kind of turnover did you have? Is that Amy?
Oh,
is that a question that you're talking about?
Oh, I just saw a raised hand, but yes.
Oh, there's one. I mean, ours was teeny tiny at the time. It was about 250,000, something like that. And I say that that's teeny tiny, but to some that might be big, depending on where you are in your journey. So I'm not saying that, but in my sector it's teeny tiny. But I think it depends on your funding, because a lot of funders will say like your turnover can't be, but your turnover must be between like 25 grand and this, and or 10 grand and this. So you have to look at what the financiers, their part of their remit is, because sometimes they don't want people who've got a big turnover. Yeah, so I would check the funding. But no, I don't. I never feel like I'm too small for anything. I think you ask the question, and the worst people will say is no, right? That's the way that I work.
It's just interesting, because I mean, I speak to quite a few organisations that are like small team wise, and I think sometimes that can make people feel that this form of finance isn't appropriate to them. But as you've said, that you were kind of.
I think any kind of finance is available to anyone, depending on what it is, your services, the impact that you make, the money you're going to generate. The rest of it, you can surround yourself with people who know more than you. So you're filling your knowledge gaps. And then it comes down to you. It comes down to how you sell yourself, how passionate you are, because people buy into people at the end of the day. So I just, and I am a big believer, like I'm a Geordie girl, and they say in Newcastle, like shy bairns getting out, meaning if you don't ask, you don't get. So people will just say no, and then you just move on to the next, It's like that. That's all they'll say is no. But I really have to go, because I've got to talk to the Lord's cricket people about training, and I haven't prepared. So
thank you so much, Art. And if there are any additional questions, I'll forward them across to you on email. But thank you so much. It was a really insightful session today, and we really appreciate you coming along.
Right. Have a good day, everyone. Enjoy the sunshine.
Bye. Bye.
We will record. We are recording this, so we'll share that as well, because I think Art's it's just so helpful hearing from people that have like sort of been there and done it. And sorry, I had to run away. I said to Olivia as we were prepping for this call this morning, I've been waiting for this furniture delivery for months, and I got the tracking link this morning, and I was like, I bet you it's going to come in the middle of that event. So thank you so much for bearing with me. I hope that was really useful. So we're going to wrap up with a couple of case studies, 7 lessons learnt, and a final Mentimeter. So Olivia, would you be able to share screen again? And I think this first case study is a really great one to start with, sort of speaking to Art's point about your turnover doesn't need to be like hundreds of thousands. And so our first case study that we wanted to spotlight this morning is Caramel Rock. And I will say on the Good Finance website, there's lots and lots of case studies. So if you're interested in learning more from context, then definitely check them out. Caramel Rock.
She did it. You can see the full screen on this one.
Yeah, you can see the screen. Yeah, thanks, Olivia. So Caramel Rock provide education and training to young people to equip them with skills that they need to find employment in the fashion industry. They provide sort of a variety of courses, and they support young people with sort of on-hand training and support, and then help them to get work experience and jobs in the fashion industry. And their revenue model is essentially they're an accredited educational centre, and they get referrals from schools, and they get paid for educational delivery. And the founder, Faith, took social investment on to provide working capital to grow the organisation. So in terms of how they measure their impact, they do that by the number of young people that engage with their courses and get qualifications and then progress onto the stages of education and employment. But at the time that they took on social investment, they were making a turnover of £28,000. And they took on investment of £86,000 to pay back over a period of 3 years. And it was that blended finance type as well, so similar to Arit, where it's a combination of debt and a combination of grant. So the cost of capital for that was 9.5%. I believe it was roughly, off the top of my head, it was roughly half of that was grant and half that was debt. So they would have been paying the cost of capital on the half that was debt. But it's worth again having a look at full case study, because there's a really good example of one where the turnover wasn't sort of hundreds of thousands of pounds. So the next one that we've got that we wanted to share this morning is an organisation called METs. So this is an interesting one. Sort of a product-based business, and the founder Pranav set up the organisation to support refugees with work experience and job readiness skills to enter the job market and integrate into society. And their product are sort of teas, they're called teas, and so their revenue model is that they sell tea blends that are all sort of in biodegradable tea bags. They're part of the fair trade movement, and they sort of employ refugees in roles throughout their organisation, which is how they make their social impact. They reinvest more than half of their profits back into the business. And it was actually really interesting over the course of the pandemic. They did sort of lots of pivoting and adapting, and sort of like reviewed their impact framework and pivoted the business to sort of carry on running post-pandemic. So they took investment of £50,000 to something called SITR, which stands for Social Investment Tax Relief. And they take £50,000 to pay back over 5 years. And social investment tax relief is a tax relief for the investor. So Amy's just popped into the chat the acronym. And Annie, could you just post the Get SITR website in there? So we've actually got a whole sort of little microsite dedicated to social investment tax relief, because this is a tax relief that's targeted towards an investor. METs is a great organisation, a great example of an organisation that's used a slightly different form of social investment to grow their revenue. And last but not least this morning, Creative Optimistic Visions. So Stacey, the founder, she basically, the organisation provides protective behaviours training. So they work with schools, local councils, local authorities to provide that training and to really help individuals to feel safe. And she sort of sets up the organisation up based on her personal experiences. At the time that Stacey took on social investment, she was sort of a sole founder working completely by herself, and it was very much sort of a passion business. She set it based up on her own sort of lived experiences, and they were making their revenue through contracts that they had with local authority and schools, etc. But they really wanted to enable Stacey to go full time with the business. So at the time that Stacey was turning over sort of £84,000, they took social investment of £19,000 which was again blended, so part grant, part loan, and to pay back over 2 years to really enable her to go full time on the business. And that's an interesting one. The amount invested was sort of less than £20,000. So sometimes we hear these stories of sort of social investment being these massive sums, but actually sometimes they can be there's smaller loans as well, just to help with working capital for things like enabling a founder to go full time. So sort of rattled through those 3 case studies just because I'm conscious of time this morning. But there are lots and lots of case studies on the Good Finance website. And I would really recommend checking them out. I've seen that someone's raised their hand. Did you want to ask the question?
Yes.
Yeah.
So that's really useful and really helpful. So thank you. To go back to the previous slide, is there a tool that we can use on your website, or a website where you can actually have a payment plan and a breakdown of, like, if you put in your numbers, and it was a blended finance model, what percentage you would actually pay per month?
Yeah.
So, you know, when what you can do with a mortgage calculator, essentially, is there something, someone said something?
Yeah.
So yes, the answer is yes.
Yes, the answer is yes. I'm really glad that you've asked. We call it the cost of capital calculator tool. So it sort of explains how the cost of capital works and why interest rates are set the way that they are. And it's one of those things where there is no standard interest rate. It will really depend from investor to investor. There's lots of variables that go into it. But yeah, really great question, because it's a really important one to think about, is that the vast majority of the time you are paying it back with interest. And so the cost of capital calculator just takes you on a little journey of working out how much your social investment could actually end up costing you. So you can sort of put in the loan amount, the interest rate and repayment period, and it can work out for you sort of the monthly repayments that it would be. It is a bit like a mortgage calculator when we were sort of building and designing it. And that's kind of inspiration that we had for organizations to work it out. But yeah, in terms, it's a good little practical tool. So definitely check it out if you're considering what those monthly repayments would be.
Just to follow on from that as well,
Yeah.
just so that I know, and it might be depending on the investor or what model you're going for, but are they usually fixed interest rates?
A really good question. I believe so. Yeah, I believe so. Okay. I know it's a big topic of discussion at the moment with everything that's going on.
Yeah, so that's why I'm asking, because obviously interest rates are volatile, so it's really important to know whether it's fixed or not, but I suppose it depends on the investor.
Yeah, exactly. I think that is a conversation that you would have directly with investors. I think a lot of the time they are fixed, but I don't think that's a hard and fast rule, so it's worth having that conversation. Although I will go away and ask that question internally in the team, because I think it's a really, really good question, actually not one that we've had before. So I will go away and ask that question, and when we follow up, we'll make sure that we put in a full answer to that.
Because I think one of the things I wanted to get in is getting into interest rates and what that would mean. So that's answered it anyway. So thank you. But I think going forward, that would be a great addition.
Yeah. We'll definitely have a think about that in the team. Great question. So we'll wrap up this morning with 7 lessons learned, and you'll have heard sort of Ara and Laura touch on some of these, but also we will have said them. And this slide is condensed, really, but over the past few years we've spoken to dozens and dozens of people that have taken on social investment, and what we've tried to do is just condense our key learnings. Actually, either Annie or Olivia, if you could post the full blog post in the chat, that would be really helpful. But I just wanted to sort of summarize and recap this morning before I hand back over to Amy to close us for the day. These are our 7 top lessons learned about social investment from the people that have been there and done it. Number 1, social investment is not benevolent money. And I think it's really important to understand that and manage your own expectations around it. And actually really good to ask questions around interest rates and the cost of capitals, because these are all like the really practical and pragmatic things that you have to think about. Unlike grant money, you will have to pay it back, and you will have to pay it back either through repayments with interest or through equity in your business. So it's really worth thinking about that as a starting point. Number 2, impact matters. So really important to be measuring your impact and sort of measuring what matters to you. What I will say is don't sort of measure things and kind of do things just because you think investors are going to want to know. Just truly measure the impact that is important to you in your organisation, and then make sure that you're communicating that with investors. To some extent, finding the right social investor is a bit like dating or a bit like matchmaking. It is very much about aligning values at the right time. So it's about finding an investor that cares about the impact that you're making and can offer you the type of investment that you're looking for at the time that you're looking for it. But it is really important to be measuring and communicating your impact with investors. And that really is where they differ from mainstream investors. They are going to want to know your impact, how you make it, how you manage it, how you measure it. Number 3 is about much more than the money. So number 1, with a lot of social investment, you'll have seen they're repaid over 5 years, 3 years, 7 years, sometimes even longer than that. So when you work with a social investor, you're getting into a long-term relationship. You know, you're talking the course of repayment that is years. And you may go on to do follow-on work with them, and it is very much about those long-term relationships. But we also know that it is about much more than the money, and I think we really saw this over the course of the pandemic. And I remember when we sort of first went into lockdown, and social investors in the space just sort of working out how they could respond to the situation and how they could support their investees. You know, we're entering a period where loads of organizations were uncertain about how they were going to be able to make those repayments. And what we saw from the social investment space was a response from investors to kind of really think about how they were going to meet these organizations in the middle, and what sort of repayment holidays could they offer, or you know, what could be done. And it is about a lot more than the money, and I think it's also testament to the fact that, you know, 85% of social investors are themselves registered charities or social enterprises. Number 4, honesty is always the best policy. So I think it's just really important from the get-go to be really super honest with investors about what you're looking for, why, how you're going to pay it back, and you know, any challenges you're having within the business. It's really important just be, you know, honest from the get-go, because it very much is about finding that right match. But equally, that goes 2 ways. So being able to have honest dialogue with investors and asking them questions as well about why they might be the right fit for you is really, really important. Number 5, why isn't it cheaper if it's social? So we get asked this a lot. So if it's social investment, it's for social organizations, why do you have to pay interest rates? Why do you have to you know, repay it? And I would actually really recommend the cost of capital calculator that I posted earlier, because there's a video that goes alongside that, explaining why interest rates are structured the way that they are. But inherently, the idea with social investment is that it's a pot of money that over time replenishes itself. So with organizations paying back into it, what it means is that that pot will not run out, and it will be there for other organizations in the future. So unlike grant money, which is, say, finite, that pot is, you know, going down. With social investment, over time, you're paying back into the pot. The interest rates essentially cover the cost of lending that capital. And there is always a cost associated to lending the capital, but also how much risk there is attached to it. Due diligence isn't fun, but it does make your business better. And Eric touched on this as well. You know, going through that process, knowing your numbers, knowing your business model, knowing what you're aiming for, you know, that process of going through due diligence and providing the information that you need for investors, it is really intensive, but it also enables you to look at your organization with a very strategic view, and that can help make your business better. Also, I fully do think and believe that if you are someone that can apply for grants, do proposals, do bids, do tender proposals, you can do due diligence. Like it's a very similar kind of process and skill set that organizations always already are going through. And last but not least, it always takes longer than you think. So if you're looking for social investment, you want to start looking for it 6 months, 8 months, 9 months before you think you should start looking for it, because it's a process that will take longer. And if there is this process of working out what's right for you, which investor is right for you, going through the due diligence, and it can take time. So And like grant giving, there aren't sort of windows where money is allocated. Most social investment happens sort of on a flowing basis, but it does take time for it to happen, and it's just, you know, or probably always going to take longer than you think. So those are my 7 lessons that we've learned from all of our peers. I have got 1 final minute, so I will hand back over to Amy and Olivia to close this out if there's anything else that you would like to touch upon this morning.
Just off mute. Thank you so much, Ishita and Olivia, for helping to organise today. And also please pass our thanks on to Arit and Laura. It was so useful. I definitely learned a lot. One of the reasons why I wrote down what SITR meant was because I didn't know that, so it helps me to remember it, so thank you. And thank you so much to everyone for joining. I hope that you've enjoyed today's session. If there are things that you want to follow up on, you know, particularly if you're interested in taking conversations around social investment further, please reach out to me and I will try and connect you to the right people. Also, just to let you know, the 2, Ishita, I don't know if this was on purpose, but Social Investment Business and Access, who were kind of showcased as providers of social investment, are involved in EDP. So to a certain extent, people have been on perhaps an unintentional first date, if we're to liken social investment to dating, with a couple of the big names out there. So I'm sure that, you know, they would be really keen to talk to people if anyone's got any further questions. And also, we really hope that this is the beginning of more work between Equally Ours and Good Finance. Olivia, there's an event, isn't there, on the 13th that could provide, I can't remember the name, so I'm going to ask you to do it in 1 second, but an in-person event on September 13th after the summer break, to which, you know, people are invited to come and kind of grow your network within the social investment space. And yeah, Olivia, I will pass on to you to provide some more details on that, so I don't want to get the name wrong. But thank you so much, everyone, for joining.
Thank you, Amy, and thanks to Ishita as well for presenting. Yeah, the event that Amy referenced is called Addressing Imbalance Live, and it will be on the 13th of September, so save the date. We'll have peer speakers there. We'll also have representatives from the investors. So it'll be a really great opportunity to kind of network, ask questions, and find out more about social investment and how it can kind of help your business. So do save the date. I'll be sharing more details then, so I'll make sure to pass them on to Amy. And if you do have any questions, as Amy said, please do reach out either to Amy or myself. Please do feel free to drop me an email. If there's any additional questions that you've got for speakers or anything, we'll be very happy to pass those on. And we will be sharing the recording of this video on the Good Finance website. So if there's anything that you want to go back to, all the information will be there, and we'll also include any of the links that we referenced during the session underneath the recording. But thank you very much, everyone, for joining today. And yeah, look forward to seeing you all soon.
Thanks so much, everyone.
Thanks so much, everyone. Have a lovely rest of your day.
Bye.
Thank you. Thank you so much. It was really informative. Thank you.
Thank you.